Hello everyone and welcome back. My name is Greg Furman and this is the VantagePoint AI Market Outlook for the week of July the 20th, 2020. Now, once again, to get started this week, we're going to begin with that very important US dollar index as we have several markets that are at critical breakout points. Now, the dollar index recovering somewhat towards the latter part of the week, but still unable to make any significant gains or overtake the T-cross long. We have several key pivot points here between 96.06 that goes all the way up to 96.67 on the dollar index. And as we can see here, we're unable to break through these critical levels. Now, what we want to look at is any kind of divergence in the market here. We can see that the medium-term trend against the long-term trend is trying to reverse back to the upside, warning us that the dollar still could rebound off of these key verified support levels. Now, we've come down to those levels, touched that level exactly on July the 15th, which is directly consistent with last month's swing low on June the 10th. So we're looking to see if this level can hold. However, we have an even bigger support level coming in at 94.47. The only way that that level can be tested, in my respectful opinion, is if the S&P 500 continues to advance. That will put downward pressure on the US dollar and upward pressure on a number of other currencies like the Aussie, the New Zealand, even the euro and the British pound may be able to recover somewhat. Now, once again, when we look at our key vantage point predicted moving average by itself, that key pivot area is 96.24. If we can overtake this 96.24 level, that will take the pressure off the dollar, at least in the short term. But if it cannot overtake this level, then the dollar could see further downside with a risk on environment. Now, if the mood turns nasty again with equities and the COVID virus, the EU summit this weekend, all of these different factors could benefit the dollar or they could sink the dollar. So we're at the mercy of some of these key events. But when we cross-reference this to the S&P 500, the S&P 500 once again back up at the yearly opening price 32.37. We're seeing if we can push higher here. Now the RSI is starting to turn back up. And again, using the RSI with a 60-40 split or just using it if it's above or below the 50 level is a far better way to use it versus overbought and oversold. Trading off an overbought or an oversold condition usually has an accuracy of about 50%. Those are just not good enough odds here, guys. Basically, you're telling the market to go up or go down when it's oversold or overbought. So we try and avoid that type of trading because it's very, very dangerous in these types of markets. So when we look at the S&P 500, once again, we put in a slightly new high this week. We've gone up to, again, the 32-31 area, only for it to see it back off yet again. Now, when we look at that key vantage point level, we can see that the entire trading week, the market has been in contact with the vantage point long predicted, which is the predicted moving average based around the correlation to 31 other markets. So we use that level as a pivot area for potential entry points. Now, our medium term crossing our long term predicted difference is again, it's warning that this trend may not be that strong. So we'll continue to monitor it, but for Forex traders, equity traders, just understand the correlation between the dollar and the S&P, that it's an inverse correlation currently, meaning, of course, that if the S&P breaks out to the upside, the dollar will break down very quickly. When we look at gold, gold continues to struggle up here, but it's holding its ground. We've made a high again, another new high this week, which looks pretty good. We haven't gone up as high as 1829, but again, we are still holding above this key vantage point T-cross long 1795. My concern is the predicted differences are continuing to drop lower. The good news is they're starting to flatten out here and our RSI has come down, kissed the 40 level, bounced back up, and now we're at the 60 level. So there's certainly some evidence that the dollar could come under additional selling pressure this coming week. But the one thing that I am looking at also here with that correlation to the equity markets is, of course, light sweet crude oil. We have been stuck at this level up here, basically going back into early March, or excuse me, early June. So we can see our predicted differences are running completely flat. But our RSI is telling us that we're losing momentum here. It doesn't necessarily point to a trend reversal, but it warns us that there isn't a lot of upward momentum above $40 a barrel. So we want to keep an eye on that one also for a potential short. Now, as we look at some of the currencies for next week, we can see that the euro is moving towards a very significant resistance zone at the high of 114.93. I do expect some volatility immediately out of the gate on Sunday night because of that EU summit. I'm hearing different rumors that there's different packages being offered. Nothing concrete as of Saturday afternoon as to what's going on, because again, this is an outlook, not a recap of something that already happened. Just to clarify, this is a forward-looking outlook as to what we're doing for the trading week. So when we look at this, in most cases, your order flow traders and your big banks are going to be targeting these very significant verified resistance zones. In my respectful opinion, if we can get above on the euro, if we can get above 115 and basically permanently stay above 115, we will see a fresh new trend in the euro. We're just not there yet, guys. The predicted differences pointing down, that is definitely reason for concern here for longs at this particular level. We also have the event risk. If we think about the bailout package that's basically being negotiated right now for the Eurozone, it very much could be like the US dollar, where the euro initially gets a bump from that, but then you buy the rumors, sell the fact. Then a few days later, the euro's plummeting again. So be careful of a false break up at these particular levels. Very dangerous level potentially to be buying the euro. Now, with the US Swiss franc, we've turned around this week as we anticipated. However, we've gotten all tangled up again in that critical vantage point T-cross long. 94.40 continues to hold this particular pair to the downside. Our predicted differences are rolling over a little bit, our RSI losing momentum, and of course our neural index is down. So for next week, 94.40 is the level we want to watch. But if we also bring in our blue line by itself, we have closed below that key vantage point T-cross long at 94.15. However, we've closed below it on a Friday. Always remember that Friday, very thin markets, liquidity is low. Monday is often a reversal day, so be cautious. Again, with this one, selling down around this particular area. And again, keep a very close eye on the dollar index and that 95.70 area. Now, with the British pound, again, the pound is really somewhat gotten pounded for the most of the week. But again, that critical T-cross long, 125.23, using these pivot areas in your trading allows you to see better an area to wait for your position. So if you wanted to go long on the pound dollar, the T-cross long at 125.23 would be that level. But with the medium term crossing the long-term predicted difference, that told us that this is not a very good level to buy up at this 126.63, which we discussed in last week's AI Weekly Outlook before the market opened, that this was going to be a problem area. So again, we've come up and tested around this area multiple times last week, failing every single time. So again, identifying these verified support and resistance zones is critically important. We have an additional support low at 124.80, and again, the T-cross long from VantagePoint at 125.23. So if we were to buy this pair, those are the levels we would look at. But right now, it looks like the pound is starting to recover a bit. We didn't break below the 40 level on the RSI, and we've recovered back above the 50 level, but just barely. So again, this pair consolidating within a tight range between the 124.80 and the upper limit high at 126.69. We'll continue to play this range as long as it holds. Now, with the dollar yen for next week, once again, the dollar yen is very often is going to follow gold prices here, guys. It's not just it's inverse to the equities, but it's positively correlated to gold. So if gold continues to advance, the dollar yen will move lower. Now we're again significant resistance as we start again moving into summer trade here. I wouldn't expect a lot of movement in August, but we could get a breakout on the major markets before August 1st, only to see the market go flat the rest of the month of August. I couldn't tell you how many times I've seen that in summer trading. So we're looking for a bigger move. But the signal here from VantagePoint is warning us it may not be what it appears to be. The medium term crossing the long term predicted difference, the neural index is positive, but the RSI is saying that we've got momentum building to the downside. So watch the pivot area. 107.25, as long as that's holding, then there'll be additional downside pressure on this particular pair. When we look at a very popular a pair that's becoming increasingly popular actually in the Forex market, the US Canada, once again, still moving sideways. Right where we're exactly where we were last week here, guys. So for now, we play the lower limit, we buy the lows and sell the highs until this particular break. So a little trick that I can share with you that in order for this to break to the upside, the S&P 500 must crash below the levels we discussed. Basically the S&P 500 would have to turn very bearish to drive US Canada to the upside. If the S&P 500 is the one that breaks out to the upside, then shorting US Canada will be a very, very good play. We know where our key levels are using our verified zones. Our high 136.46 to the 130, approximately the 137.15 area, and very, very strong support sitting down at 134.9, between 134.90 and about the 134.71 area, 71 to 86 level. And if we get below this particular support level at 133.16, we're basically talking a complete trend reversal on this particular pair. My optimism on that in the current market environment remains heavily guarded. So watch our main levels here for now. We'll buy the bottom, sell the top. We'll use the neural index. It's green, telling us we're going to go higher. The RSI is basically flat, so we'll continue to monitor this pair, but again, it's going to need a breakout on the S&P 500 to break this channel on USCAD. Now, the Aussie and the New Zealand, basically the same trade here, guys. We've made a slightly new high here. We're still moderately bullish, but let me be clear. Intermarket correlations are definitely what will determine the next move on the Aussie, the New Zealand, and even the CAD. So if the S&P goes positive for the year and it stays positive for the year, the Aussie will turn positive for the year also. Get above its yearly opening price, above the 70-cent mark. If it can do, but it's going to need the help of stocks here, guys, for that to happen. And the New Zealand dollar is no different. Right now, they are holding the key levels. The T-cross long on New Zealand, 65.16, and the T-cross long on VantagePoint, that key level, 69.41. As long as those levels hold, then the long trade is the play. But if the S&P 500 turns further negative, the Aussie and the New Zealand will be pulled down with it, and the US CAD will be taken higher. So once again, we're getting closer to the month of August, where we're going to go into heavy consolidation. That the likelihood is we're going to go to heavy consolidation, but we've still got a relatively busy week ahead of us. But as long as you know your levels, guys, you will all do just fine. So with that said, this is the VantagePoint AI Market Outlook for the week of July the 20th, 2020.